Good evening, ladies and gentlemen. Welcome to another episode of Decluttered, the Candid Traders podcast. Today, we are super duper excited to have one of the most popular and well known traders in the Indian market, Mr. Jagan, with us. He has had truly an inspirational journey. I heard him say in one of his talks that, when he was young, when he was a little boy, his dream was that he should someday complete 10th standard. So he comes from a very, very modest background and is truly one of those exemplary people who show that you with enough work you can get anywhere. And really, this is going to be a hell of an interaction, and all of the viewers are going to have lots to learn and take away. So I am super happy. Thank you so much, Jagan sir. And yeah, Praful, a lot of fun this is going to be.
Absolutely, Shreyas. I mean, Jagan sir is one of those guys who popularized this 920 straddle, right? Now everyone talks about this 920 straddle, but Jagan sir was one of those first people who made this 920 straddle mainstream. I still remember one of Jagan sir videos where he was talking at the Traders Carnival. I think there are not many videos in the trading domain which got more than 1 million hits. I think that is one of the very few videos which had got 1 million plus views.
I think it was 5 million.
Jagan 5 million. Oh man. And Jagan sir, I'm sure that your journey is nothing short of an inspiration. And right now you're handling clients worth around 40 crores, which is not at all a joke. And I'm sure this podcast will be full of educational content and we get to learn a lot from you. And we are expecting one hell of a podcast this is going to turn out. And thanks a lot for taking your time for doing this. Welcome back.
Yeah. Thank you. It's a pleasure to share. Yeah.
So I want to get straight to the meat here, really, and as much as possible, I want to ensure that Jagan sir, you have the freedom to go into whatever topic because that is the format we follow. It is like a normal conversation, and you have gone from someone who started as a positional trader to someone who then became very data driven, completely data oriented, backtest oriented. You tested out in our conversation before all the kinds of possible systems that one can think of, and finally you arrived that that you only have two systems, which is one is your trend following system and the other is your intraday system. So I just want to understand what was that process of transformation from the period when you started to what kind of trading you did, how you transitioned. Today, what is your opinion on what strategies are most apt utilization of your margin? So I want to just understand your entire process.
Okay. So when I started trying, most of the people know that actually from the day one I started selling options, just because I'm coming from a different school of thought, and what big boys are doing, that's what I was planning to do. So during that time, seriously, I don't know any strategy about option selling. The only part I know is wherever Nifty is 500 points or 400 points away from it, go and sell the call and put, and you make money. And even fool can make money in 2014 and 15 because market was not that volatile. So make money, sell options, make money, make money, make money. And during that period, right, so I started learning a lot of strategies. So calendar, butterfly, all these things. But in 2018, I started realizing that we should do only risk defense strategy. The reason was budget. In 2018, I still remember the day, and next day to the budget, I was really bearish. The market was actually next day gap down, but I was really upset because I sold only call. I was making profit. That's a different thought process. But the part is actually, what if you might be went wrong? So I thought that actually I will do only the risk defense strategy. So till 2018, my bread and butter was positional trade and expiry trading. And 2018, I started realizing that this expiry trading I cannot leverage for 100 CR because 100 CR and if I take 10 times leverage, it is going to be 1000 CR, and executing 1000 CR in expiry trading and then trying to make money. It may be possible, but if there is a stop loss jump, if there is some problem with exchange, some problem with the broker, then you may get wiped out. So any system will have a boundary. So otherwise, actually, Mukesh Ambani will do only options. He will not do any other business, right? It could be technical analysis, it could be option buying, option selling, could be mean reversion or pullback. Any system will have a boundaries. So with the volume, when I say boundaries, it's a volume and time. So in 2018, I started reducing my expiry trading. I started shifting to the risk defense strategy. You will not believe me. And when I found expiry trading in 2016, okay, the next year exchange introduced weekly expiry. I was lucky. When it was coincidence. Okay, so I was really lucky. Okay, so when I thought I'm going to stop expiry trading, where exactly they stopped the leverage. Okay, but it was totally coincidence. Okay, and then I thought in 2000 after 2018, I came to know that JEGAN, rather than selling options for penny rupees premium, okay, very very chota premium, okay, going for OTM selling options, you can come somewhat closer and then reduce the exposure and then make money. So that's where actually I started thinking differently, because in 2018 I was using only 4 times leverage. So my strategy was changing for every 6 months. Okay, this year also I'm changing my strategies a little bit. So in 2018 I started reducing my exposure. I was coming closer. So before 2018, it is far for OTM as much as possible. 1 rupee, 2 rupee, 3 rupees, sell option, get 15 times exposure, sell, collect it, manage your position, 2% portfolio stop loss, and make profit. And to be very honest, you super duper skill to make profit in expiry trading for getting 15 times exposure and then selling option. The only problem is you need to have a portfolio stop loss that many people don't follow. So you can take 100 times leverage, you can take 1,000 times leverage, but the profit and risk should be based on your capital, not based on your leverage.
Absolutely.
So my risk management is always based on the capital. So I don't look actually how much leverage I'm taking. So right now, then I started realizing, JEGAN, you put into one situation where you cannot take leverage, but still you are making profit. How automatically my mind is coming closer to the, rather than doing a far OTM short strangle, I was doing a close to short strangle. I was able to make the same return. Then there was no exposure. Then what is the option? You need to come to the closest one. So that is nothing but short straddle. So that's where I landed into 920 straddle. So do a 920 straddle and getting the same return what I was getting to 15 times exposure. Okay. So in a way, actually, I would say that actually SEBI only pushed me to this 920 straddle. So SEBI cut the exposure and cut the exposure. I was selling off for OTM, then come closer, 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 closer. Now it is a short strategy. We cannot go closer than this.
Absolutely.
With respect to the intraday, this is the history. Okay. Till 2018, I was selling naked option. And I said actually before 2018, if someone is making profit in options selling, I would say they should not raise the collar, because market was not that volatile like we are seeing right now. So it's making profit. By the time, luckily or unlucky, I'm not really sure. Okay, so I shifted to risk defense strategy. As soon as I shifted to risk defense strategy, black span even started. Corona fall, all this fall, gap down, big gaps. So I would say, if I would have come at 2008, I may not be in the market. I would have sold some short strangle in 2018. I would have got trapped by this Corona fall at all. In Corona fall, I did not make any loss at all. So I was doing only risk defense strategy. And very honest, I had this setback once I shifted to risk defense strategy, because if you are making 100 rupees with the net selling, with the risk defense strategies, it's very difficult to make 25 rupees, because the DK what you are getting with the selling, the say almost 75% DK will be there with your hedging as well. Because risk defense strategy, the selling option and buying options, both will DK. Only the DK difference is the profit. And the DK difference is not so high, because the buying you are doing in the hedging will have a highest time decay speed. Okay. So it was really, really tough to make a profit with the risk defense strategy. And then I thought that, okay, so being a mathematician, let's do some number analysis. Okay. So that's where I went to the quant. Okay. So then I started looking the premium. So in what premium we can sell, in what premium we can buy, which is historically had given a profit. Then I started studying all these things. Right. So that's where I landed to one arbitrage strategy. Okay, so kind of arbitrage strategy wherein I'll be selling options in stocks and I'll be buying hedging in index. So this I name it as a in stock, because stocks plus index. So I'll be selling options in stocks and I'll be buying options in index. So that risk defense strategy was giving 3% per month consistently. So I was looking for opportunity. So this is based on opportunity. Whenever there is an opportunity, you are going to enter, because this is not a purely speculation. This is not purely hedging. it comes under arbitrage. Arbitrage you should do only when there is opportunity, right? So I was able to enter these strategies and was able to make a profit. But in back of my mind, I had a thought. What is the thought process I had? I was selling options in stocks and options in index. And Bank Nifty is the option I am buying. Okay, that is in monthly. Then I thought, Jagan, why don't you do this 920 straddles? Because you have buy options in this monthly options. Okay, it is wasted. Okay, so when you sell options, the margin is going to be less. When you do the 920 straddle, the margin is going to be less because you have a buy options in stock. Okay, that is for exchange, it is naked. For the exchange shake, actually it is naked, but it is not naked because the hedging what I bought is for the stock option selling. But the exchange will not understand. Exchange will understand if you are selling options in Bank Nifty and buying options in Bank Nifty, it is a hedge. So if you are selling options in HDFC Bank and buying options in Bank Nifty, it is not a hedging according to the exchange, but it is a hedging for them. So what I thought, Jagan, let's do this 920 status. Let's study this, okay? Because the margin is going to be very less. And you have a buy options, you can make use of it. That's where I landed in 920 option. When I landed in 920 option and did all the quants, I came to know that 90-80% of the trading system is not performing better than 920 status, to be very honest. Okay. And you take any trend following system, you take any mean reversal, you take any ORB, and most of the people, they are trying to get close to 500 rupees or 600 rupees per lot per day, per trade. Okay. Though they are getting this profit, this not possible every day, or this is not possible every time. But with 920 strategies, you are getting the opportunities every day. So then I thought that, Jagan, rather than finding something very complicated, when you have something very simple, why don't you follow it? Okay. So that's where I landed to 920 strategy. So once I landed to 920 strategy, so for the capital what I have, definitely I can't enter at 920. So 920 is a model, it is not an exact time. So you are going to enter at multiple time with multiple stop loss, with multiple system. So different things. So I started writing algo for everything. So I did a complete back testing. So this is how my journey of positional and intraday trade.
Wonderful, beautiful. I have one question here. So when you said it's better than a lot of other strategies you tested, can you cover some of what are those other strategies you tested? And also, and this is going to be a question that I'm sure you get very often. I want to know your answer to it. If everyone, like a lot of people today are doing 920 straddle, right? So a lot of traders I know have different variations of it, but essentially the same thing to take a short volatility spread. How come it still works? Like even if you go by back tests, it works. And if you see that generally they say when the entire market is doing something, that time that particular system loses its edge or stops working. Why do you think 920 straddle still continues to be profitable quarter on quarter? And do you have some theory around that?
To be very honest, 920 strategy is not a non-directional strategy. It is a directional strategy. If you put a small stop loss, okay, so the advantage of 920 strategy, I'll tell you what, because you are looking for a breakout and then you are taking a trade. And when you do a regular trend following, right? So when you test a regular trend following, you are looking for some double top and then you're looking for the breakout. Most of the time it breaks and then it goes down and then it touches the downside one, or else it breaks down and then it breaks up. All these problems you will get out actually in the 920 strategy because you are looking for only the premium breakout. So that is the actual logic in the 920 strategy. Why many people are not able to still why this 920 strategy is able to work for a longer period of time? There are two reasons. Number one reason, the 920 strategy by default it has a time decay edge, little edge. It's not a high edge, it is having little edge. That is number one. And most trend following system doesn't have this time decay edge. If you are looking for a breakout, if you are right, you are going to make profit. If you are wrong, you are going to make a loss. But here, if you are wrong, you are going to get shorter time decay difference. Okay, the loss may not be equal to the trend following system. Number one. Number two, any trend following, any trading system will have a drawdown. Okay, so this 920 strategy had a big problem in September, November, October, and all. It has double set hit for many times.
I think that was the time when a lot of these Twitter folks started criticizing this 920 straddle. They call it like, this is a very simple strategy and it stops working because everyone has started to do it. But surprisingly, again from November, it again started picking up, and December, January, it has done fantastically well, I believe.
Yes. December, for me, it has given around 14% return.
Wow. One.
And before that, October was 2%. And for Jan, actually, I did some mistake. Otherwise, actually, it would have been more than 4%. Actually, it has given only 1.5%. And this month, it has given close to 4%. So you need to have a patience, all right? Any strategy in the Holy Grail is you need to have a patience. So see, all these problems are coming to the traders because they are not backtested. If you have backtested by your hands, by your eyes, you will get a conviction. Because in backtesting, you will come to know the number of series of consecutive losses and how much loss it will come. Then you will understand that this is part and parcel of business. Someone is saying you are trying to execute, and if it fails immediately, then you lose the confidence. The conviction will come in by 2 ways. Okay, number one, you should have a lot of profit. Okay, 1 year I almost made 4 crores profit in my career. Okay, so that conviction is one conviction. Okay, second conviction, if you are a new trader, if you are new to the markets with a lower capital, then you do the extensive backtesting. The more backtesting you do, the more conviction you get. Otherwise, it's very difficult to trade any trading system, not only 920. 920 is almost having 65% success rate. If you're going for trend following, the success rate is only 33%. Then it is going to be disaster for you. If you are not able to do successful trading in 920, it is not possible to do any trading at all. The basic thing is a 920. Because the success rate is very high.
Totally.
Absolutely.
Yeah, there are many traders I know whose trading success rate is less than 30%. In such a cases, you are going to get 20 continuous losses. So how are you going to accept it, right? So if you are not able to accept 920, you cannot do any trading system at all. So 920 is like a LKG. If you don't pass LKG, you can't go to industry.
What are the realistic expectations, sir? Like, for example, if somebody were to follow the 920 strategy model, ideally over a period of time, and when I say over a period of time, I'm talking about, let's say, volatility will obviously change, but over 1, 2, 3 years, what is realistic from this?
Realistic would be if you are keeping less volume on Monday and Tuesday, less volume. And if you are making good volume on Wednesday and Thursday, and if you are not trading Friday, probably you will get 3% per month in the long run.
Okay.
So basically, you're saying that you have to capitalize on the days where there is accelerated theta decay.
Correct, exactly right. Say for example, I can say numbers also. For Monday and Tuesday, every 4 lakhs you can do 1 lot. Okay, I'm saying very, very defensive way because we are talking in social media, so we should not say big number at all. And then you are doing for every 2 lakhs, if you're doing only 1 lot on Wednesday and Thursday, in long run, you are going to make 3% per month. And the drawdown for your entire career maybe 10%, 10% for the drawdown for the entire career.
So what is the biggest drawdown that you have personally taken?
With respect to 920 straddle or before that?
With respect to 920 straddle.
Both. You can tell us about both.
Okay. Then the biggest drawdown in my career is 8%. That happened in only one day. There was a NS and all stop losses are removed and the market was cracking. So all my stop losses are removed and I'm trying to exit my position. I'm not able to exit. So that is the 8% drawdown I had. And before that, and before 2018, when I was doing a naked selling, demonetization, I think it is in 2016, where I had 5% loss. That is the maximum loss. So when I shifted to 920 straddle, the highest drawdown I had till now in the last 9 months is 5%.
Wow. And so far in this period, what has been the returns?
Return is so far 53%.
Wow. Excellent.
Wow. Jagan sir, I have a question for you. So the thing is, as you said, that every 6 months you keep changing the strategy, right? Depending upon the market conditions, depending upon how the volatility in the market has changed and all that. So do you necessarily change a strategy once it stops working, or every 6 months you just go and, experiment something new, see like what's working in the market, just to, tweak something and make it better? What's your approach?
Yeah, actually, many people are thinking that actually I'm changing my strategy based on the market or it stops working, but it is not really so. The reason why I'm changing my strategy for two reasons. The capital is increasing, so I need to find out the right strategy for my capital. When I said actually I had some arbitrage opportunity, it is possible with 5 lakhs, it is possible with 50 lakhs, but it is not possible with 5 CR. Because we are selling options with the stocks, so we cannot do 100 lots in a single second. It is not possible at all. Then you will get a huge slippages. So in recent times, before that, it was due to, I mean, whatever I was changing before 2019, it is mainly because I got a better opportunity. And whatever the strategy I had been doing before, it's still applicable. That is the reason why whatever the talk I had in Traders Carnival, it is still applicable. Okay. But after 2020, my thought process is we need to find out the strategy according to the capital, because my capital right now, the last time actually my algo subscribed account total size is 42 CR. So each time actually I need to find out the different strategy. I cannot put the whole capital in a single second. It is not possible. So it should be uncorrelated. So my thought process become like the actual hedge fund. So we need to find out the strategy accordingly. That is the reason why I'm changing my strategies. And some of the strategies the retail cannot execute. Some of the strategy I was doing 2 years, 3 years before I cannot do because of the higher capital.
Wonderful.
And
So,
Jagan sir, let's say there are two reasons that a strategy might give a drawdown, right? So one is its inherent nature of giving you the drawdown, and the nature of the markets getting changed. So what is that tipping point? What is the threshold up to which you'll just stick with the strategy and say that, okay, this is just the normal phase of the strategy where it's giving me drawdown? And when will you decide that, okay, now the market dynamics is completely changing and I need to tweak something? When is that? When will you go with that?
So for whatever the strategy I have backtested, okay, the historical drawdown, I haven't touched it. So there is no thought process that actually my strategy is not working. So 920 straddle, whatever I backtested, the historical drawdown, whatever I had seen, I haven't realized so far. There is a drawdown, but it is less than the historical drawdown, number one. By any chance, the historical drawdown may be beaten. So it is possible. Historical drawdown may come or it may go higher. So my take is, if it is higher than 1.5 times, then the historical, the peak drawdown, then I will stop it. Yes. Then I would say that actually the right word is actually, if you are getting more than 1.5 times of historical drawdown, then you may be breaking your boundaries.
Fair
It
enough.
means that trying to execute the strategy with 1,000 CR, it may not work.
Very
There is
true.
every
Very true.
strategy will have a boundary. So you need to understand this boundaries.
absolutely. Sir, I have a question here. Now, you are a complete tech person. You worked in the tech industry. I believe, you were in the US as well. You were always in the whole software space, right? And that's why, you've had this advantage of, unlike most people who are not very tech savvy, I'm sure you can write up a code. It is nothing for you to, test something. For example, people can buy all the data they want from the market tick by tick, but they won't know how to use it unless they have that ability. And there are some websites where you can go and test your strategy and all that, but it's not as efficient as you actually doing it yourself, setting your parameters. So for people who don't have that tech savviness, like for example, you also for your trade execution, it's completely 100% automated, if I'm not wrong, that you have zero manual input. You go, you switch on the button, it's and it's doing its thing, right? So is that absolutely necessary for, like, for example, a retail trader who's watching? Does he have to have that kind of skill set? If not, what are some of the workarounds, and how much do you think that whole side has played a role in transitioning to this kind of a trading that you're doing?
I would say for a retail people, right? So you don't need to code. That is my take. There are n number of software available in the open market. So Algobaba, Algo Mojo, PT, everything we can do with Tradetron. Everything you can, if you know the rules, you can go and feed the rules into the system. They can trade on behalf of yourself. It is possible. See, this algo, writing your own algo, building your own algo, you should do only for two reasons. Okay. Number one, your capital size is huge, and that is the reason why you will get a lot of slippages, right? And you need the real time, that's a TFT, right? So uh, that kind of software you need. So for which you need a special software. Number one. And number two, if you are handling multiple accounts, right? So the third party software, whatever we have in Drawdown or any software you know, open market, right? So it is not super efficient to handle multiple clients because they are treating each client as a separate person. So for myself, actually, all subscribed account actually it comes under my capital zone. So it is going to be only one package. So the reason why I'm saying is, let me go a little bit techie. Okay. So with the third party, right? So if they will treat every client as a separate thread. So for every client, they will start a separate thread in the machine. So each thread will run for each client. So if I have 60 clients, they will be starting 60 threads, which is going to be very, very slow. And the sync issue will be there. A lot of problems will be there. When you run multiple clients in third party, because third party will concentrate on retail people for only one client. They are not going to sell the products for multiple clients because there are not much customers if they want to sell this product, right? If they want to sell to the retail people, only one person, it is easy to sell. If you are saying actually this software will take care of multiple clients, then many people will not buy, right? So if you want to handle multiple clients or if you have a huge capital, then go for a own. Otherwise, you don't need to go for your own code at all. There are n number of software which is throwaway price. You can go and then use it.
Correct. So just for people, for example, who want to subscribe to such a service, I believe this is like a software as a service. The algo is being provided as a software as a service, and it is technically that person only trading. What are the options like because you mentioned a few names, but how do you think, for example, somebody has some risk capital, they want to try and run a particular strategy through some of the algo providers. I don't think there is that much clarity on who are the reliable people, who are not. So, any websites that you would say are worth checking out, looking at?
And to be very honest, I haven't executed a single trade with the third party. But what I'm hearing is Tradetron, Algobaba, Algomojo. There are a lot of vendors actually. I don't know the names, but I haven't tried. You can go and check it. There is a demo version available for 2 weeks of time. You can take it. Uh, from there, actually, you can take a call. But small capital, you can go with the third party because the slippage is less. And when you have a huge capital, the third party algo is not efficient to take care of the slippage.
Okay.
Okay, the time is also it will be an issue. So when you trade for 40 CRs, your timing should be accurate. When you send the order, it should go within a 1 second. If it goes after 30 seconds or 40 seconds, then it is going to make a huge loss. Okay, so the time efficiency is for a bigger capital. If you are trading with less than 25 lakhs, then I would say that actually go for third party one. You can try a lot of things. A lot of vendors are available. The 15 days period, trial period is there. You can give a try.
Okay. Now that we are talking about the algo based services, I just want to go on a tangent here. SEBI is contemplating on bringing some amount of regulations to who can provide the algorithmic services and all that. So let's say SEBI comes up with some amount of regulations. So how would your services get affected, and how would all these platforms like Tradetron, Algomojo, and all that, how are these people going to get affected?
So first of all, actually, whatever the SEBI has given is only the paper model. So it is only in the discussion. It is not actually actual circular. Second thing, I don't think so. It is possible to stop because even they are stopping the API level. So there are some way actually through HTTP requests without it possible to place order. So that SEBI cannot stop it. Number one. Second one actually, so virtual trading is also possible. I can open a Chrome through program and then through Kite or whatever the Nest or now I can open through program and I can press F1 or F2. So it is very difficult to find out actually whether this F1 or F2 is done through coding or F1 F2 is done through manual. It is not possible to distinguish through. It is not possible at all. So this is possible. So as a programmer, right? So I know much better than the API part. So I had done a lot of coding work, a lot of hooking work. Actually, this is called hooking. Had done. So I don't think so. SEBI will be able to stop this one. So that's what my take. That's the maximum what they can do. They can stop the API, but stopping the API will not stop the algo at all, because algo is a big thing. API is part of it.
I think one takeaway here for everyone should be look at how Mr. Jagan is speaking. Right? So whenever SEBI has done anything to push him, he has accepted it with open arms, saying, "Okay, come give." And I think this is testament to show how you've overcome how many hardships in life to get here, because you're like, okay, some new rule is coming in, we will find a workaround, no problem. And I think that attitude goes a long way in everything. I mean, this is so evident, you know. I saw your post also. I was actually very angry when leverage was taken away, but I saw your post and you were like, what is there? Now this is the new rule. We adapt and we move forward. So wonderful.
Shreyas, if you remember, I had made a video on JEGAN because like all the traders, okay, including all the big names and all that, like people are all in support of that no trading day.
Yeah.
And JEGAN casually tweeted, no, this the margin rule and all that, I don't think it should affect me. Like I'm very cool about it. I'm going to trade. And then I got little annoyed and like, okay, why is this guy doing like that? So because since he has come to popularity because of retailers and all that, I thought, okay, it is time for you to stand up for retailers and all that. So I had made a video. So before this podcast started recording, I was having a chat with Jagan. I told him, have you watched it? And Jagan is like, no, I haven't watched it. I'm like, okay, thank God.
But
there are a lot of things. So
Sorry.
the leverage part and upper part, the things but a lot of things which was against me, introduced by SEBI, lot of things. Okay, so before 2018 there was a span margin. Okay, so you need to pay only half the margin. Then SEBI somehow found that actually people are exploiting this. Okay, then they said, okay, so you can assume that actually it's a leverage for positional. So you need to pay only half a margin. Then SEBI said actually no, exposure margin cannot be given to the client. They need to pay the full margin. So my return was down. But what shall I do? I can't do anything. So okay, so let me move on. Then they said actually the margin, they are the long-term options, right? So we used to sell long-term option, like the huge premium, and then invest into mutual fund and trying to convert this speculation income as an investment income, so that we will get a tax benefit at all. So that also I'm trying. So then SEBI said, oh, okay, this is how they are trying to convert the speculative, I mean the actual trading income to the investment income. Say for example, you are playing with a long-term option. Okay. The margin to sell option is 1 lakh. If you are selling long-term option, then you collect 10 lakhs. You are using the margin is 1 lakh, and you are collecting a premium of 10 lakhs. Okay. This 10 lakhs you go and put it into some investment. This 10 lakhs will give a non-taxable income because there was no long-term capital gain during that time. Okay.
Correct.
So you are getting this non-taxable income from this one 10 lakhs. Okay. But anyway, you will make little loss in the taxable income in trading. That is fine. So this SEBI somehow found that actually, okay, people are making money. One. So for long-term option, you need to pay only cash. Then they increase the margin as well. They put additional margin as well. Then what shall we do? So we move on. Okay. Then the haircut also, they introduce higher haircut for the stock. What shall we do? We move on. Okay. So lot of things recently introduced. I think almost 10 or 12 things actually which got affected, which affected myself, which affected me, whatever the SEBI rule. But what to do actually? We should move on, right? So I got used to it. Maybe the exposure one actually it is, I mean, it is very close to the retail people, right? So, but I got used to all these problems. Yeah.
Jagan, getting used to all these bureaucratic hurdles, that's one thing. But personally, do you think it's progressive? Because SEBI keeps on bringing some rules which absolutely make no sense, right? Like as an all, we are already paying the 3 times margin than the global standards. Over and above, the intraday margins are removed, the haircuts are increased. Okay, they're all doing it under the pretext of saving the retailers and reducing the speculation and all that. What do you personally think? Is it in the beneficial of is it in the benefit of people, or it's just the facade?
The thing is actually SEBI thought process is there are two thought process. Okay, one is for this much investment volume, this much speculation only can happen. There is a ratio. Say for example, 1 crore volume is happening in an investment. Maybe 3 crore is the volume can happen in a speculation. That is an industry standard, international standard. This international standard is not working for India because the speculation is very high in India. You got the point, right? When compared to the investment, the speculation is very, very high. So SEBI want to control, number one. Number two, SEBI thought process is somebody can lose, but they should not lose in one day. Okay? So by giving a leverage, there are some people actually who are getting wiped out in one day. And second thing is actually this leverage was given by a broker in inappropriate way, unethical way, because you are investing, you are putting your money in a trading account. I am also putting in a trading account, and you are not taking leverage. I am taking a leverage. Broker is giving your money to myself to take care of this leverage. See, all these problems are started coming. That is the reason why SEBI thought that actually let's remove it. So in a way, I would say that once this leverage is removed, I truly understand that many people got affected, even myself. But if the leverage is given, when the leverage was there, lot of brokers went bankrupt. I can see, I had seen a lot of brokers went bankrupt, and brokers being bankrupt is also it's okay. But the people who had invested with the brokers also, they also lost the money. So that problem is gone right now. In a way, it affected many people. That is, I truly understand. At the same time, without leverage, it is not possible to make a loss in one day. With the leverage, it is possible to lose all the money in one day. But now, right now, it is not possible. So I would say that somehow it had helped, but people who are using the leverage actually will get affected.
Anyway, I think that argument is done and dusted. I think one thing we have to all accept is at the end of the day, what the regulator does, it does. They don't care about what anyone else to say. So that argument is, it's just wasted. But I want to know something, Jagan sir. It is, so you spoke about boundaries, right? So you spoke about strategies and they have boundaries and they cannot be scaled to any extent. Just want to know till what extent do you see scalability for yourself? Because your capital base is growing, it's constantly going up, and as you are working on making it better, I'm sure it's just a matter of time before it scales to that boundary level. So, what is your opinion in terms of would you then be diversifying into other kind of strategies? Is there something you're testing? And secondly, I also want to know about you previously had investments in stocks. But if I'm not wrong, what you did was you liquidated all of your stocks with the idea that you will use the futures market to act as an investment, almost like a momentum based investment. So, can you give us a little bit of a look into that perspective also?
Yeah, sure. See, I said, right, so any system will have a boundaries. So how do you define the boundaries? It's important, right? So 920 studies, so how much capital I can put? You have a trend following system, how much capital you can put? Short strangle, how much capital you can put? If you are a system trader, it is easy to boundaries because you have backtested your system. You know how much return will give. Okay, so the backtested system is giving 100 rupees, and if you are getting 70 rupees in long run, you are okay. Okay, so according to the backtest, whatever the results you are getting after the trade, also you are going to verify whether it is getting the profit and loss as per the backtesting. So if you are able to capture 70% of the backtesting report, the real-time report, it's okay. If you are getting less than 70%, then you should look for a different system. So that is the boundary I have. So right now, my system is coming close to 70%. So that is the reason why I'm looking for some other system.
Wonderful, excellent. So result based.
A result based. So you never know, right? Sometimes the market dynamics would have changed. Before that, it was accepting 10 CR. Right now, it is not accepting 10 CR. Right now, the market may be accepting more volume. So you never know when the boundaries may increase or decrease. The measurement what I have is the 70% of the backtesting result. If you're getting good to go with that boundaries. If you're getting less than 70%, you should stop it or you should diversify with more setups. So that is the boundaries. Number two, what is my take on investment? So first of all, I'm not so good at investment. Okay, I'm good only at mathematics. So I don't look at the news. I don't look at the fundamentals. I don't know what is balance sheet at all. So what I thought that actually somehow we should invest into the market because the people who are wealthy in the world, most people are invested. So I thought that actually we can invest. So I started investing into the market with the momentum stocks. So which are touching the all-time high. Okay, so whichever the stocks which are going all-time high, then let's invest and then sell a call option. That's going to be the big buy covered call. So covered call and going to get a rental out of it. Then we can make money. I was getting comfortable money. And how I had a bad, super duper time with the trading, I had a super duper worst time with investment, wherein as soon as I invested, market crashed. And the corona was okay. So I had complete opposite luck. Okay, so I was totally unlucky with investment. So when market started coming down, what I did, I started selling a call aggressively. Then I started shorting the market, trying to manage and everything I was able to do. But over a period of time, right? So once I come to the quant, I came to know that selling call will work, but it is not the optimal solution. In Indian market, you make money by selling a put. You don't make much profit by selling a call. And if I look all my trade in the 7 years, I made loss only in a call, not in a put, because India is a developing country wherein most of the time the market goes up. So you don't need so much technical to say that market is bullish. Okay. If you say market is, and 70% of the time you're going to be right in India. So always say market is bullish. Okay. So by probability it may be 50%, but by reality 70% market is bullish. Okay. So selling call is working. I was making profit. The profit is coming not because of selling call, by my adjustment. Okay. Then I thought that JEGAN, you are getting profit in a call options not because of selling a call. It is not rental income. It's because of your adjustment. So you should think. Then when I analyze the market, okay, then I thought that it is not better to sell a call option. You should run this profit. Okay. So next question is, when you run the profit, what if it goes down? Then you should dive into trend following. Moreover, when you do the covered call, right? The covered call, the worst part of, but your loss is unlimited, which I don't like. Then I thought that, okay, let's crack this trend following system. What is the best thing? And I would say that actually to find a positional trend following system in Nifty with the higher time frame is nothing. It's a piece of cake. If you look at the chart, most of the time you'll find out. Okay? Then I started looking into Ami Broker. I started reading a lot of books. So let's find this trend following system, how it works, and especially for Indian market. Then I found the breakout model, wherein I started following the trend. Once I started following the trend, I thought that JEGAN never ever sell a call, because we'll sell a call 50 rupees one time, you will make profit. Another time this 50 rupees will go to 500 rupees. Okay. Then you should manage all these things. It's not possible. So do only trend following system, nothing else. Then I started, what I did, I liquidated all my stocks. I'm going only with the Nifty futures. My backtesting system had a drawdown of 13% as per 10 years. And it is beating buy and hold. If you are investing into Nifty Bs or cash market, the DD is, the drawdown is 60%. With the trend following system, it is only 13%. So which is better? Trend following system is better. So I backtested for 10 years. Each candle I went through. The kind of conviction I'm getting in trend following, I don't watch it. My team member, she doesn't know much about the market. She just see the signal and say to me, JEGAN, go long, I exit. That's it. Nothing else. So that's what I do with the trend following system.
Excellent.
But JEGAN, since you're comparing, futures trend following trading along with, the cash investment, whatever that is, investing in Nifty Bs or something, there is an additional advantage of investing in Nifty Bs, because Nifty Bs or bank Bs, they can be used to, they can be collateralized, and then some margin can be obtained, which can be used to do some intraday trading, right? So you said that the drawdown is 13% here and the drawdown is 60% here. So can we weigh them both on the same scale?
Yes, because we can weigh, because the reason is, say for example, I am going long for 900 quantities right now. The reason is 900 quantities, it is equivalent to 1.5 crores of cash market. But the margin I am going to spend, it is only 25 lakhs. Okay, so remaining 1.25 crores is ideal. This 1.25 crores, you can always do it for intraday.
And by the way, if I'm not wrong, you're only trend following long only strategy, right? You're not shorting the market in the trend following way.
Indian market, I don't think so. For positional one, shorting the market is a suicide.
Yeah, very true.
Most
I think
So shorting the market is a suicide. Unless otherwise there is a corona fall or 2008 crash, actually you are not going to make profit at all. And whenever, I mean, even you check with the 920 straddle, whenever the put option stop loss is hit, you should trial aggressively, because whenever the market is falling, the recovery is fast. Okay, whenever the market goes up, it doesn't. I mean, I'm saying about intraday. Okay? It doesn't come that much. The V-shaped recovery is very much possible only in a short side. In upside, doesn't do the V-shaped recovery much. You go and check the history. Not only in intraday, in positional also. In push, even there was a fall right now, right? 16.4. As soon as it goes to 16.4 or 16.5, look at the jump it has. Immediate jump, right? So it is very, very difficult to capture the short with respect to the positioner. If you want to make profit in a short, you should go minimum less than 15 minutes time frame, then only you will get a short. Even with the short, you should trial it very, very aggressively. That is my take. So my trend following system, it is based on 5 minutes, and it is only long wood system.
Excellent. So, Jagan sir, I want to ask you, where do you see yourself? Right now, first of all, congratulations on the new office. We saw some of the pictures. It looks beautiful. It's a huge step, and congratulations. What are your goals as a trader? Like, where do you see yourselves going? And right now, you've automated a lot of your execution, so you're spending most of your time finding new strategies and stuff like that. What is your ideal scenario 5 years, 10 years down the line?
When I entered into 2014, right, so I was talking to a lot of traders. Okay, so during that time, I don't know what is long and short. I used to say that actually I buy, I sell options. That's what I say. I don't know the term long and short, but I was making profit for 3 months of time, and everyone was making fun of me. And I said actually I was going to manage the 100 CR, and almost everybody lost it. So right now I'm managing 40 CR. My goal was to manage the 100 CR. So that was the goal, and soon I'm going to get it. That is number one. And second thing, actually, the reason why I came to option selling just because of the big boy thought process. The big boy thought process, you should get more passive income. So I am going to concentrate more on passive. So before that, I get a guilty feel actually. Again, you came to stock market for passive income, but what you are doing is a trading is active income. But somehow now we are into algo. Algo is a passive income. So now you can say that trading is also passive income. You are not actively doing it, right? So somebody is doing on behalf of you. So I'm going to explore a little bit on investment, not immediately, maybe after 1 year of time or 2 years of time. Because once the capital size is increasing, there is, as I said, actually there is a boundary for everything. So I can't do 100 CR and 1000 CR, 10,000 CR in a trading. Then I should look for HFT or some other opportunity. So I'm going to put my hands in investment as well. So maybe the trend following system, and everything is going to be quant based. And being a mathematician, what I know only the number game. I don't know anything else. So that's what I'm going to do. The investment part, actually, I'm going to touch maybe after a year. So I'm going to concentrate more on passive income. So that's my goal. That's going to be my thought process.
Jagan sir, one personal question. I'm a big believer of, having a well-balanced overall life. So since you started handling clients' money, since you started running some trading systems for your clients, what do you think? Has your stress levels gone up? So how are you? Are you having a relaxed approach? So because let's say, agree or not, when people see that, okay, I've taken a 2% stop loss or a 3% stop loss, it's normal for someone to just call you up and say, hey, what went wrong today and all that. So how does the dealing with the clients have an impact on your life?
I mean, I don't think so. Actually, I had such impact in my life, because actually so far actually I haven't made big loss to the client. Even I haven't made any loss to the client. That may be the one confidence. Second thing is I don't talk to any client, right? So I mean everything is routed through my office. So we are very sure that actually what is the risk is. Okay, so we keep informing the clients, though we are making profit. Every month we are making profit. Whenever we make profit, we send a broadcast message. Okay, so the risk may happen at any time, 20%. Okay, so I'm not a god to make profit always. The 20% drawdown, it may happen at time. Jagan, you made only 8% drawdown in your life. Why are you saying 20%? No, 20% is possible as per the backtest. So be prepared for it. So you need to keep sending these broadcast messages. Let the client, let the people, let the students know that actually there is a risk associated with the trading, though you are making profit. This I was constantly doing with all my students, with all my clients, with all my subordinates, peers, everything. So that might be the reason. Yeah.
Fantastic, fantastic.
Absolutely. Now, I mean, to be honest, like we covered so much good stuff here. But to people starting out now, sir, like people, the same journey that you started a long time back, to people who are just starting out now in the market, would you tell them that, getting straight into algo trading is probably a better way, system trading is going to be a better way, or like, is it okay for people to like do discretionary trades? Like, where do you see the future, like in our market itself? Do you think that discretionary trading eventually will just go to zero and all of it will be algo based and everyone is going to be running systems? Do you have any thoughts around that?
I would say that actually both will work. That is my thought process because I have been doing this discretionary trading for 6 years. Now I've been doing only the system trading. Uh, uh, but I don't think so. The discretionary trading will be there. Definitely in option selling it is. But I would say that most of the discretionary trader are system trader because most of the discretion they do based on the MTM. So they look at the MTM and then react. Even you take myself, if I get 1% loss, then I go and adjust. This MTM is based on your price.
Yeah.
Correct, right? And you are reacting to the price. You are almost reaction to the price, right? So I would say that most of the people are discretionary. There is a difference between impulsive trading and discretionary trading. Impulsive trading, you get a feel and then you go and trade, take a long or short. Discretionary trading, you get kind of MTM loss, you have some level, so you follow some system. I hope that system will work for sure for longer run. That depends on each one. So you are going to dive into both discretionary trading and system trading, whichever it is working, you can go ahead. For myself, actually, both work for me. But system trading, I can scale up. I will get a lot of time. It is going to be passive. You can delegate. You can work on some other system. There are a lot of benefits with the system trading, but which is missing with the discretionary trading.
Jagan sir, I think it has been a fantastic podcast. I mean, our viewers have got a lot of things to learn. And so, as a new entrant in the market, so you already said that 920 straddle is like the LKG of the strategy. So if you cannot with discipline follow this 920 straddle, then probably you're not cut out for trading. So
Yeah,
what do you suggest that what should be the approach of a new entrant in building a system? Because building a system is not an easy task, right? You have to first know your risk appetite, know your perception of the market, know your belief systems and all that. But how a new entrant can start with system building? What are your thoughts on it?
okay, so I'll tell the both the sides. Okay, number one, actually, with respect to the system trading, I'll tell what should be done. With respect to the discretionary option trading, what we should do. Okay, number one, with respect to the system, you should backtest your system for 10 years if you have the data. Say, for example, with the futures, you have the 10 years data. I think more than 10 years you have the data, you can backtest. That is number one. If you are playing with options, we have 5 years data. You are going to backtest for 5 years. So you will come to know whatever the thought process you have, right? Whether it is working or not. Because I was under assumption that actually, okay, this is how I have seen the market. Okay, if I take this rule, this will give a fantastic money. That is a thought process I had. But when I really tested, it doesn't give profit. So if you don't do the back testing, you have a very strong conviction that actually it worked because this strong conviction is coming uh, in the last period, maybe the short period of time. You're watching the market for 1 month of time, then you think that okay, 20 moving average is really working. So if you are going long about 20 moving average, it is working. So this kind of thought process you will get, but if you backtest, you will come to know what is the reality. So, number one, you
Recency
should
bias.
so number one, because we all we are all coming under wishful thinking. Okay, so whatever we are thinking, that is what it is happening. Because your eyes will show you what you want.
Correct.
Okay, right?
Absolutely.
Your brain also will adjust according to that, right? So even you put you in a jail or prison, actually it is going to be struggle for 1 or 10 or maybe for 1 week or 10 days. For 11th day you are going to be happy. The same way, if you look at the chart for 10 days or 11 days, you feel that okay, second breakout is working, third breakout is working. Okay. In downside, actually, first breakout is working. So these kind of thought process you will get is very common for any person. Okay. So it may be a good rule, it may not be a good rule. That for which you need a backtest. And you need a when you form a rule, right, it should be very generic. Okay. So how do you say your rule is curve fit or generic? Okay. So if you have very specific things, say for example, 2018, I will put 40 rupees as a stop loss. 2016, I will put 20 rupees stop loss. 2020, I will put 100 rupees stop loss. If you have a very specific hardcore number, right? So hard coded number that is going to be copy. Each your rule should be very very generic. Okay, so these kind of market for these kind of ATR for these kind of situations, this is what you're going to follow. If you have a very very generic rule, it is not a curve fit one, and you are going to do the back testing for 10 years. The system trading you can take. That is number one. Number two, in system trading, your drawdown should not be higher than 20%. Okay. I'm saying 20% also is very high, okay, but 20% is okay because the historical drawdown, if it shows 20%, at any time it may go to 30% because in new condition the system may not work, right? So it may not work. So 20% if you're getting a drawdown, you should get minimum 40%. So 1:2 minimum, okay? So for a moderate trader, if you're a good trader, you should do the 1:3. 20% drawdown if you're getting, then probably you should get 60% return per annum. So this is the industry standard you should have. Okay. For any trading system, if you are getting more than 30% loss, okay, then you may need to stop your trading because trading may be the right business for you. It may not be the right business because investment right now it is not a right business. So there is no shame in accepting that actually trading is not for me. Okay, so it may not be a cup of tea, but there is nothing wrong in accepting it. Okay, so I can't do the meditation, so I'm a kind of hyperactive person, so I can't do the meditation the same way. Actually, somehow actually if you feel that actually you are not able to follow the rules, you are not able to follow the mathematical rule, you are not able to do the back testing, it is better to outsource to the mutual fund or it's better to outsource to the hedge fund if you are not able to do. But the thing is, have a mathematical rule. Don't form a impulsive behavior. The many people who are coming to the market having an impulsive behavior. Okay, right now the market. 2 days I had been watching the market. Market is bullish. Let me go long. So these kind of you should not do. This is called impulsive behavior. You form any rule, mathematical rule, backtest for 10 years. What is the drawdown? It should not be higher than 20, and the reward should be more than 2 times. Then you can go for system trading with position size according to your draw. So that's my take on system trading. I would say that it's really tough, system trading. Okay. Then coming to this option selling part, right? Option selling part, if you're doing discretionary or system trading or whatever you call it as, you can make any mistakes. I used to say this, option selling is being with the mother. Okay. So small mistake actually, the mother will forgive. Okay. So you don't need to worry about this. But there are some mistakes you should not do in option selling. I'll tell you what. Number one, last 15 days, if you're selling options, or last week, if you're selling options, either you're going to be zero or you're going to be hero. Either you're going to make a huge profit or you're going to make a huge loss. I used to say this, in option selling, you should get a profit very slowly and you should get a loss very slowly. The reason is it okay to get a quick profit or quick loss? People say, oh, okay, no, you're getting huge profit and quick loss, both are same. No? What is the problem if you're getting slow? Okay. The problem is if you're getting loss very, very fast, then you can't do the adjustment. Okay. Last 10 days, if you are in the expiry, if you are trying to sell options, number one, if there is a gap down, most of the gap down or gap up, most of the big volatile day, if you look at, it happened in the last week of the month, back tested. Last week, even you look at the recent volatility, most of the people lost in option selling. They had been making money for 6 months, 9 months, but they lost all the money in a 1 month because they were taking positions in the last week. Okay, and that is the reason why there is a. At the same time, there is a edge in the last week. There is a time decay. You're getting going to get make loss of profit. So what shall I do? If you want to make your positions in the last week, maybe 30% of your portfolio you can keep it in the last week. Otherwise, better to keep it in monthly. At the same time, can I keep my positions in yearly? No. Yearly, if you keep your positions, the decay is going to be very less. Okay. I have backtested this one. The long-term options, Some year it will give profit, some year it will not give profit. So that is not, I would say I'm not, I don't like that long-term option very much. But at the same time, I also don't want to go with the short-term. You always go with monthly option. It's better because monthly option, there is a moderate TK, there is a moderate risk. Yearly option, very, very less TK, but there is a huge risk which happens. The corona fall, you are going to make a huge loss. Right? Weekly options, every week actually you are going to watch the Singapore Nifty. If there is a 200 points gap down, then you are going to blame all the Prime Minister of you're going to and this news is unnecessary. Finance Minister, this news is unnecessary. Why it happened? All these things are going to say all this reason. Okay, see, you need to accept that 20% drop is anytime is possible. Anytime is possible. 20% drop is anytime possible. Even I would say 40% fall is anytime possible. There is some pandemic is going to happen in the stock market. 20% gap down next day morning 9:15 and day after tomorrow 20% drop is possible. How will you manage? If you are not able to manage your position, then you are not fit for a trading. So number one, this is with respect to the positional option trading I'm saying. Okay. And number two, you should know what is your notional value. So what is the maximum risk you are taking with your option selling? So many people don't know what is its notional value. They know what is short strangle, what is Greeks, how to do adjustments and blah, 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 blah. It is totally unnecessary. The reason why I'm saying is, it's very difficult to convince someone in option selling because with the future, you can convince the people with the risk management because every time they are going to hit and they are going to take a stop loss, then they, loss is there. But when somebody is selling options, say that there is a risk, they say that every time I'm selling, I'm getting profit only, right? So why are you saying there is a risk? So people will not understand because people are having this short-term gratification. They know that actually there is no risk at all. So there is a problem in our brain. Okay? So anything that happens for one day, your brain will understand that actually it is going to happen for a week of time. Okay? Anything that happens for a week of time, if the brain will understand that it is going to happen for a month of time. Anything that happens for a month of time, the brain will understand that it's going to happen for a year. So this is what you're going to do. I had seen the same thought process I had. So historically, for 3 years, I had seen the market 400 points gap down, never ever happen in Bank Nifty. It is good to sell options 500 points away Bank Nifty. Now you look at how many times the Bank Nifty fell more than 1,200 points, 1,500 points in intraday. So history may be repeated or history may be created. It can happen. Anything can happen. So you should be ready for your notional. What is your notional value? So the notional value you should know, and you should do only the risk defense strategy. And to be very honest, let me be brutally honest. If you are making a profit by selling next option, it is not because of the talent. It is only because the time decay. Okay, you don't need to be super duper brilliant to make profit in option selling. That is a well-known truth. Okay, and if you are shifting to the risk defense strategy, it is going to be really hard to make a profit. Yes, because the buy options it is going to eat, and somehow you should shift to the risk defense strategy. That is okay. JEGAN sir, actually, I am making only naked option selling. I am making 6% return, 10% return every month. What is wrong in it? Yes, you can do, but keep in mind that if you have 1 crore, you should put only 25 lakhs because this 25 lakhs may get wiped out anytime. You are selling option, naked option, anytime it may get wiped out. So if you are selling option, 25% of your wealth if you are putting into the market, then you go for a naked selling. You should make 6% per month because the risk you are taking is a huge risk. The capital is the risk. So with the naked selling, if you are making 25% per annum, it is not really worth. Getting my point, right?
100%.
But the risk defense strategy, yeah. If your risk defense strategy, if you are making 25% per annum, it is worth taking. But the naked selling, I would say that you should make minimum 50% return because the risk the associated with naked selling is huge. You may not see this risk in 10 years of time, but you may see, either you will see, or your son will see, or your grandson will see.
It is coming. It is there. It is a time bomb.
So anytime it may happen. So my take is naked selling. You want to do anything in weekly or monthly, 25% of your capital you can do the naked selling. And you should be able to bring your capital. You should not worry if the capital is wiped out. You should be able to bring the capital again if the capital is wiped out. If you can't afford to lose the entire capital, then go for a risk defense strategy. In risk defense strategy, make sure that actually your option selling positions, right? The people say actually uh, uh, the risk management important and the position sizing is important, all these things important, they'll say. But I would say no, because the root cause is actually your return expectation. Okay. The return expectation, what you have, will reflect in your money management and risk management. If your return expectation is very high, automatically you will go and sell the options very close to the spot. So if your return expectation is very decent, 3% per month, automatically go for OTM and you will do the position session accordingly. Your money management also will automatically design in such a way that you will not lose more. So you need to have a return expectation. I would say this. So what is the difference between retail people and big boy? People say that actually, Jagan sir, big boys are making profit because they have a huge capital, and that is the reason why they are making profit. Next, I will ask this question. Okay, if you are giving 5 lakhs to the big boy and ask him give one account to the big boy, will he make a profit? Yes. Then how do you say that actually big money is playing the big money is the reason actually to make profit? Then say that they have the knowledge. Then you can also have that knowledge. Now, what is the problem? Okay, then they think that, oh, okay, so the big boy is having a skill, that is the reason why he is making money. Actually speaking, it is not the skill. Okay, not only in any places. Okay, any business or anything you take, the skill set is very, very little. The point here is that the difference between a big boy and retail is the return expectation. The retail people are having a huge expectation based on their financial needs. Okay, based on their financial. So they are having rental, they need to pay the tuition fees, they need to pay the school fees, they have a loan, home loan. And that's where every expectation they are pushing into the market and taking a positions according to the return expectation. See, when somebody is punching the order in the trading terminal, right? So the trading terminal will not understand whether it's a big buy or retail people. For trading terminal, for NSE, actually it is a buy order or sell order. It doesn't distinguish whether you are a big buy or retail. Okay, so what distinguishes whether it's a profitable trader or retail, or what distinguishes whether you are a retail people or big boy? The only difference is the mindset, the return expectation, what you have. So if you have a 1 lakh capital and you are expecting 2,000 or 3,000 per month, it is possible you are a big boy because your return expectation is very decent. At the same time, you are having 1 crore capital and your return expectation is 10 lakhs per month, then you are a retail. So it is not the capital which defines whether you are retail people or big boy. It is the return expectation which defines whether you are retail or big boy. Got it right?
Absolutely.
Yes, it's not skill, but it's more of a behavioral aspect itself.
I used to say that is attitude. Okay. In fact, I had seen a lot of things. Okay. So when you have a bigger capital, it's very difficult to make profit because you get a lot of huge slippages. Yeah. You don't get a lot of opportunity at all. Lot of system you cannot execute with the bigger capital. As I said, the arbitrage opportunity that you can't do with the bigger capital at all. In fact, retail people are having the edge, but the problem is most of the time, so retail people, right? So they will not accept their mistake. That is the key point. Okay, so they need to blame someone for the failure, and that is the reason why they are losing it. So as a retail people, if you are coming to option selling, you should make sure that it's a retail people. So you should make sure that your mindset is like a big boy. When I came to market, I had only 3 lakhs capital. My return expectation, you will not believe me, only 6,000 rupees per month. Because I'm coming from a different school of thought from the big boy or rich dad poor dad, where my return expectation was JEGAN 2% per month. Even with the 100 CR 2% per month, that is the return expectation. Go and set the options accordingly, you will get it. Okay. So now retail people will say, now with 1 lakh actually, how I am able to manage 2,000 rupees per month? How I am able to manage my family needs? See, your stock market will not understand your family needs. Stock market is ready to give ROI based on the capital. If you need more return, actually, you should bring more capital. You should understand. Otherwise, your capital will be wiped out. Okay, so if you have 1 lakh capital, maybe you can try with the USD INR. If you have maybe 5 lakhs, you can trade with the Nifty or Bank Nifty. So based on your capital, you can switch. So the capital is not deciding your mindset. You are deciding your mindset. Okay. So have the return expectation properly. Accordingly, you go for strategies and make sure that actually you are going to be in the last week and make sure that actually you are not doing any trading on big event positional one, because the black swan event, most of the time it is going to happen only during the mega event. So 90% of the time actually the black swan is coming. Also, black swan event is always associated with the big event. For mega event, don't trade, and last week don't trade, and have a return expectation. I would say if you are making loss, you are going to be unlucky. With all these rules, you are going to be totally unlucky.
Superb. I think that's
Absolutely.
so many truth bombs, so many real things.
Last 5 minutes was pure gold, dude.
No,
Shreyas.
really, completely. I mean, I think if people should rewind and watch that part again. So true.
Exactly my thought.
Yeah, everything from how, if you're doing naked positional, I think nobody says that positional option sellers. You have to generate that big return because you're taking that risk, right? That time bomb risk. So maybe in 1 or 2 years, if you can at least pull out whatever capital you put, then you can at least say that, okay, no problem. Now I will lose.
Yeah, that's yeah.
Superb.
Say for example, you are working in Chennai, you are getting 50,000 salary, okay, and then you are going to the place where Ukraine, okay, so or Afghanistan, right? For 51K, you should not go. You should go at least for 5 lakhs. There is a risk associated with the place, right? So don't go. You are going to Somalia, then you should say actually I need 5.
Absolutely, 100% on point. Thank you so much, sir. This was truly like one of the best discussions I've had with anyone. It is a true pleasure to have you with us, and I'm really looking forward to like having conversations with you further as well. I really super excited to see how your system develops because you're constantly improving it. And in our conversation, you spoke about how even today, if you trade discretionarily, you will make more money than with your algo. But discretionary trading is not that scalable, which is why you want to transition there. So even though you can generate an alpha if you were to manually trade, you're still constantly improving that side. I'm very excited to see how that turns out.
All right, thank you.
Yeah. Yes, Jagan sir, it was a fantastic session. I think our audience has got a lot of nuggets to take away from this podcast. And thanks for taking your time having this conversation. And just like Shreyas, I'm looking forward to have more conversations with you. And thanks for coming here.